Why do you feel stuck even when you know so much? It's not your stuck, it's your state. For builders who nailed the tech and now face the rest, this is UNCODED, translating tech into profit.
Okay, hi everyone, good evening. You are on UNCODED, and this evening we will have, our guest is Rob Matzkin. Rob is an entrepreneur, an investor, and a strategic advisor with deep expertise across venture capital, business growth, and high-impact advisory services. Thank you very much, Rob, for being here. And I know that you have a very deep expertise in startup and grow venture companies, startup companies. And I want to ask you a few questions about what you have been doing in the past and your experience and so on. So the first question is, you have scaled business across several sectors, from AI to art. What pattern do you see in founders who scale well versus those that burn out? What are the differences?
Yeah, I think a few things is this. One is, and I'll say for me, when I burnt out versus not, right? It's having a life balance, right? A lot of this isn't new stuff, right? But having a life balance, right? Having a good way to decompress or get into a flow state, whether that's sports or fitness or whatever your hobbies might be, or meditation, right? But from a business perspective itself, have it be a passion, have it be something you love, have it being something meaningful to you that gives you purpose, right? And be very intentional. The other thing that I see is the more mature founders. The one thing I like to preach these days, especially since I'm no longer in my 20s anymore, is, do you know what the most successful age for successful founders is? Do you know, Maurizio? Yeah, it's like mid-40s, right? So I think when we have the experience, we have the wisdom, and yeah. But the biggest thing, I think the other biggest piece of advice is have a team. Don't be a solo founder. If you're a solo founder, to many investors, including me, I think you're uninvestable.
Yeah, absolutely. You smell a fish immediately.
Yeah, exactly.
Yeah, I think that this is not understood at all, because we have this idea that, the entrepreneur, the founder is a kind of magician, genius that does everything by himself, which is absolutely not the case.
Not only that, to be a solo founder, that's the mindset of that founder, that he's or she is a magician. I won't even say she, because a female founder is never alone. Only the male ego is going to be alone, right? Mm-hmm. But from an investor's perspective, there's two things. One, if you have a huge ego, I don't want to deal with you. That means you're not going to be listening to my feedback, and you're going to think I'm stupid. Guess what? I'm not stupid, right? And if you're that arrogant, I don't want to deal with you. Unless you're like a prima donna. If you're really, I'll say the next Elon Musk, then maybe all bets are off. But chances are you're not. And the second thing is, if you have a co-founder, guess what? At least one other person believes that you're not crazy and believes in you and investing their time and effort into you.
Yeah, absolutely. Absolutely. I have a friend which say that, you should be three. And he described the three: the product guy, the marketing sales guy, and the financial guy. Maybe three at the beginning is a little bit too much, but, anyway, a co-founder is necessity.
Absolutely. The financial component, I think, after you get to Series A or Series B, having a real CFO full-time makes a difference. But I think either one of those founders could take on that role, especially with good outside help.
To tell you the truth, whenever I see a startup with a financial guy, I am always very skeptical. Always.
Yeah.
Because if they worry about money, it's very likely that they are doing something tricky.
Yeah.
Normally, you worry about the product, the market, the business model, more technical things, but
not. It's, like one of my really good friends Harvard guy, McKinsey guy, went into this big AI startup. And when I think about him, he came in when they raised $50 million. And, he's the official CFO, but it's about systematizing things, streamlining things, how to deploy that money responsible, solving these big strategic problems with the CEO. That's when you need the financial guy. But anyway, I think we digress from the original question.
Yeah. Yeah. Okay, you talk about burnout, and you have said I've been reading about you coming out to the other side of burnout by asking a better question.
Yep.
Which is very interesting because we learn at the end of our career that we rather ask a good question than reply to them. No?
Yeah.
What was the question and how they change the way you now advise founders?
Well, I don't know if I have the question, but I'll say this to reiterate that. If you ask the right questions, you'll get the right answer. If you ask the wrong question, you're never going to get the right answer.
Yeah.
Right? But also, it really comes down to, and I think this is probably going to be my theme of the day because this is how I'm thinking today. But when I'm in my 20s, I'm smart. I know the solution. I see the solution in my head. I'm going to do it, and that's the way it's going to be. And it's the worst thing you could do.
Yeah.
But if you ask the right questions, and what I mean by that is if you test, I was just on a call with a new client today, and he goes, should I hire a marketing firm? Should I do that? Should I do this? Should I do that? I'm like, we're going to figure it out, but we're going to let the market tell us, and we're going to run a test. Right? The most successful companies in the world, Google became Google because they were able to run 50 tests a week.
Yeah.
And each test, whether it was pass or fail, it was in sales, marketing. It wasn't just product. Everything's testing is for products, for everything. Let the market tell you. And if you ask a question and the market tells you empirically by data, that is what's going to drive you one step closer to success. If you say the data's bad, the test was stupid, I don't want to accept, no. You're right. So a lot of founders will say, oh, the test failed, my strategy's wrong, it means I'm a failure, the company's failing. No. It just means it just means no. It means you can't go that way. What's the better way? Okay, your idea's wrong. Great. Your business isn't going to work. Okay, great. Do something else. You could do another company, another idea, yeah.
Because probably they didn't didn't burn out yet. So they think that it's fancy to be a founders and start up a company and, it's easy. But then, you understand that mistakes are there to help you in doing the right thing.
Exactly. Mistakes are there to learn and to give you feedback. And if you listen to that feedback, you'll come up with the right thing. And if your idea, your product, you're getting the wrong feedback, it doesn't mean you have to give up, doesn't mean you need anything about you or failing or succeeding. It just means find another product, find another thing, find a pivot, you can keep going. So anyway.
Yeah, absolutely. Amazon does it still today. I mean, I've been doing it in the last 20 years. I mean,
Google, Amazon, Facebook, Microsoft, they're all test-driven.
Yeah, absolutely. Next question. You act as a fractional CRO, as I read, for many scaling companies.
I do.
What are the most common revenue blind spots you see in tech startup? And how can founders fix them early?
I think this is why I said it was going to be a theme. It's testing. It's letting the feedback, same client I was speaking to goes, should I hire a marketing firm? I go, absolutely not. Give me a few weeks. Why? Because there's 138 different ways to market. There's 12 different ways of doing sales, probably more. One of my more successful friends from a consulting perspective, I love this business model. He goes, you do a Series A, you hire me. We do your marketing. We figure out what marketing is going to work. It's going to be 1 to 2. When we figure that out 6 months later, you hire a chief marketing officer that specializes in that, and you go run with that, right? So is there one thing or a blind spot? Everybody thinks it's social media or Facebook or Google, and that's going to drive it. No, it's going to be something, but figure out what it is, test a lot of things. Don't spend a lot of money. Find what you could do, find what you could do to drive success early, inexpensively, do things guerrilla, and then look for some things that scale. But it's like, I look at it like this. Growth is a ladder, right? And I don't know if you have ladders in Italy or if you guys do something clever or you have something more complicated. But you want to go one rung at a time. And if you skip rungs, the likelihood of you sliding back down, screwing up, falling off. So get some traction with some guerrilla marketing. Get a little bit more guerrilla. You don't need... By the way, the biggest red flag to an investor is looking at your budget and having this pie chart and go 40% on sales and marketing, which isn't necessarily bad or good. Well, how are you going to spend that? Well, we're going to hire a big sales guy with a network, and then we're going to spend another lot of money on ads. Well, have you tested those ads? Do you know what a cost per acquisition is for those ads? Do you know what the LTV for those ads are? No, I haven't done it, but with your money, I'll figure it out.
Exactly. With your money, I'll figure it out. That is the problem. That is the exact problem.
Yeah.
Yeah, but I have seen startup also. Well, this is kind of normal at a very early stage. People do not validate idea. No. They don't have any clue. They had just a nice idea, and they pretend that out of that idea they will find a market. They will never find it. I mean,
maybe they may have dumb luck. 1 out of 1,000 might, who knows? But the other thing to that I see a lot, especially people going into big businesses, to enterprise, is this is the way it should be done. This is the logical way this industry should be run. Let me tell you how you should be doing it.
Yeah. And then I think that there is another problem because there is all this ecosystem that is around startup, which is very, very competitive and very tough environment because it's full of very bright people like you, no? And these guys, most of the time young guys, they are really driven up to the bootstrap to succeed.
Yeah.
So there is an attitude of hiding things, and there is a general confirmation bias which is always on, because they are afraid to lose the relationship with the potential investor, saying that something is not working or they have to test it better or they have to pivot something or whatever. They are afraid to be wrong, which is exactly the opposite of what they should do.
Yep. So, it's funny. A lot of startups, they look at investors as it's the relationship they have with their parents is the relationship they have with their investors. Where what usually happens, and I used to, when I talk to VCs about this, right, is VCs either have clients where they ask their VC every day for advice, and before they do anything, they ask the VC for permission or their opinion. Mm-hmm. Or it's the other end of the spectrum where they hid something, they crashed the car, and they try and fix it with spray paint or something, thinking the investor won't see it. But it's like, what relationship did you have with your dad? Or something like that, right? And neither one works.
Yeah, absolutely not.
Right? So you didn't answer this question, but I'll answer my own question is, the relationship you need to have with your investors, and this goes back to the co-founder conversation, is you need to be humble. You need to be coachable, right? You need to be trustworthy. You need to be transparent. But really, the structure of a company is really simple. You have the board. The board of directors decides what happens. They give orders to the chief executive officer to execute those orders and run day to day. The co-founders are probably going to be a chairman of the board and members of the board and control of that board. but those investors have board seats, and their opinions matter of what direction you're going to go with the company. Doesn't mean they're right. I still to this day, one of my VCs back in the day, they're one of the most successful VCs. They've done like $40 billion in exits. They crushed it in COVID. I still don't talk to the managing director because we got in a fight because he wanted me to take a 1 in 1,000 bet. And if we made it, we'd be a unicorn. If we failed 99 times, we would have. He didn't care. But we went the other way. This company still operates, still successful, but we went the other way. He still doesn't talk to me. So it doesn't mean they're right, but you definitely need to listen to them. And if you don't, and we're in their 20s when he did it, well, you might still not talk to them. So anyway.
Yeah. Okay, next question. As a VC with 50 million under management, how do you evaluate founder clarity? What makes a founder or team investable, especially in AI and deep tech? I am really curious of understanding from you, how do you evaluate these young guys on a technical side? If you evaluate it on the technical side, because it's not easy.
Well, so there's a few different things, right? So first of all, my fund, we invest in government technology. Our thesis comes out of consulting where we understand how to evaluate if you're going to get a government contract or not. And we also help with that. So for me, I don't even have to be smart. I'm like, will you get a government contract? No,
Understand.
I can't invest. If I do, I will. Now let me say this. I still look for many things. One is what I just said I'll repeat what I just said about it, co-founders, right? Or the founding team. Are you coachable or investable? Do I trust you? Are you a good fiduciary? All those things, right? From a technical perspective, I will run you through the ringer from a technical perspective. I will put you in front of my advisors to see if you have the chops. I'll evaluate your technology, right? Those are the things I want to see. Will it work? Do I believe in your business model and your go-to-market strategies? Yes or no, right? So those are things that I definitely look for. So can I speak to the general AI industry? For me, I'm not a big fan of investing, even if it was in my thesis. I don't know how AI agents are going to work out or not with ChatGPT or any of the large language models owning that data. And being a wrapper, I think there's a big liability there.
Absolutely.
And all those executives have said that they're interested in that wrapper game and they're interested in taking it over. So anyway.
I found this incredible. I was talking about this with my former guest, which is a former executive of in Google, talking about agents which are plugged to large language model. And I was telling him the story of a guy that was asking for advice to me. And I told him, look, you should not be tied exclusively to OpenAI or whatever. Because once OpenAI is out of business, what you do? You should test on different model, and you should also develop your model, because you're not dependable on only one company. And he was looking at me like a crazy guy. I mean, why I should not use OpenAI?
Well, so I think it's actually a different issue. OpenAI and them shutting the doors, I don't think that's a likelihood of happening.
Yeah,
right?
Absolutely, it's not likely.
But them turning you off and saying, you know what, we want this market, we're turning you off now with no notice. In their terms and conditions, I believe they have every right to, but they own your data.
Yeah, obviously.
They literally, you've trained them how to do your company, and they could turn you off tomorrow, and every other of your competitors has trained them, and they could just go do it.
Yeah.
If they so chose. So, and I literally heard Sanjay Novella say that that's what they're interested in going out and doing. And anyway, but that's a whole other story, and now we're a mile away from your original question.
Yeah, it's true. But, it was interesting.
Yeah.
Last question. Mm-hmm. You have worked with family offices in art, sport, and tech.
Yep.
How can founders learn to think like investor, not just pitching you and pitching investor like they normally do? Pitching is the best sport for founders, no?
It's really simple, right? If you go in, I'll try and be funny, But if you go in like a slick Italian guy and say, hey, I have an idea for you and it's going to be great, right? Don't do that, right? Don't do that. But, there's a maxim. You're presenting investors an opportunity. Now, if that opportunity means that you need to manipulate or massage your data, it's probably not an opportunity. But what you're really doing and what we're up to and what family offices and investors are looking for is an opportunity, right? When I talk about my VC fund, my opportunity is really simple. If you don't have a government contract and your revenue is coming from going into government, your valuation is really low. But then the next day you get a $30 million agreement with the government, your valuation is really high. And it's obvious and it's simple. Where I'm going is, as startup founders, I think we lose sight of why investors invest. Right? There's all these different things out there, but it's so simple. They're doing it because they're money managers looking to make money. In many ways, we're degenerate gamblers because we're not looking for, we say 7% returns in the market. Ugh. We want 1,000x. We want 100x. 1,000x would be great. We want to turn $30,000 into $300 million, right?
Obviously.
Then we want the lotto ticket. So we're not looking for the purpose, or we're not looking to allow you to build your tech and to build your dream and empower you there, or your purpose, or whatever that is. Yeah, those are cherries on top, icing on the cake. But we need to believe in you and the core technology that we trust you. We trust you with our money, that you're not running away with it. We trust you that you could do what you say you're going to do. We trust you that you can make money. We trust you that you can make a lot of money. Those are probably some good starts. So your deck is about showcasing those things, right? When I build out, a lot of times when I work with my clients, they go, I have a deck. I go, okay, great. Does it fit this model? Did you actually hit these questions? I have financial plans. Okay. So I learned this from my CFO friends. My buddy Shim, he won't look at a business plan. He won't look at a deck. He won't look at anything. He goes, show me the Excel. He'll look at the Excel. Now I can do this too. I look at an Excel and I go, I'll tell you everything about this business and exactly how it's going to grow, exactly how it's going to fail, and exactly what its problems are. I don't even know what they do, but I can tell you by looking at the numbers.
Yeah.
Numbers are the language of business. So anyway, long story short, it's like speaking any language. If you want to court a girl, right, sales, investment, it's like dating. If you're going to go and do all the things that you want to do on a date and what makes you happy, good luck getting that girl. If you do all the things that make her happy, you'll probably do something right. Now, it doesn't mean fake it. I didn't say that, right? But it really means, like, if you hit the right notes with investors and speak to them how they want to be spoken to, give them the data points. Like what I do with my clients is I know what investors are going to be looking for. We preempt all their questions, and at the end they usually go, got it. Okay, let me review this, right? Let me bring my partner on, right? Yeah. Because we've answered all their questions. They didn't go on I'll answer another question, but a lot of times when people do all these materials, they talk about their whole vision. And there could be this 1% idea that's crazy, but then the whole conversation with investors is talking about this one idea, but it's not even the business. So making sure we get rid of that and only keeping them focused. And so there's just so much that goes into it. The basics is be trustworthy. If they trust you as a fiduciary that's going to make them money and a lot of money, that's what they're looking for.
I use a metaphor to explain to young guys what they have to do, how they have to behave with the investor. I tell them that it's like they have to bring a car which is perfectly working without gas, without gasoline. And the role of the investor is to put the gas if he likes the car and if he thinks that the car is good. But the role of the investor is not building the car, or not fixing the founders, or not fixing the technology. The role of the investor is just give you the money to scale something that is working already. Because
a lot of times, it also depends on the stage, right? Friends and family, they're there to help you build the car and give you a workshop.
Yeah, obviously, yes.
Pre-seed, same thing. Seed, absolutely. Series A up and to the right? But the other thing I see a lot of is a lot of people will spend a lot of time speaking to investors who have no chance of investing. The wrong size, the wrong state, wrong industry, wrong thesis, wrong background. So many people are like, I just want a VC. No, you don't want a VC. You're a pre-seed. Even if you could convince a VC that you like, great. They're going to demand so much of you in the fiduciary responsibility of it, you're not going to be ready for that type of scrutiny, let alone getting past their investor committees.
Yes.
So anyway.
Yes, okay, we complete our exercise. It was very funny. Thank you very much. Well, I was very happy to have you here, and I thank you once again for being here with me, and I hope to see you soon, okay?
Thank you. Stay in touch. Appreciate it.
Thank you. Bye-bye. Bye-bye.
Thanks for listening to this episode. Follow the show so you don't miss any episode. And remember, for those looking for the secret sauce, there is none in the soup.